right, legends, hope you can hear me. You should be able to see me. Everything looks good. I'm getting a couple of warnings here. I'm not sure why, but let me know in the comment section if you can hear me crispy clean, if you can see me not pixelating. Right, let me put the music softly there in the background. Okay, legends, let's do a little bit of technical analysis here on the price of Bitcoin. Very confusing, I'm not going to lie, very confusing price action that is currently happening here in this zone. But let's go here onto the 4-hour time frame and let's just take stock of, well, where are we? Okay, we have a high, we have a low. Okay, we've had some little corrections along the way, and now we have a much larger correction here at the moment. For the moment, it has to be said, from a market structure perspective, we have a high, we have a lower high, lower high, lower high, and we have lower lows. Okay, so it makes sense that you either drop from here, or you could still do this and still fall to the downside, but you still want to form a lower high and continue momentum to the downside, because that's a priority of the market structure, unless this high is claimed. This high is the most important high, and we're still very far away. So what you would like to see for the bulls, for the confirmation traders, okay, you want to see the strength being broken, firstly, okay. You want to see some high time frame candle closes above. That's what you want to see. And you want this high, ladies and gentlemen, not to be tapped. You don't want to see this, okay. You want to see this level smashed. You want to see price move up here and take it properly, okay, so that you have a confirmed higher high. Then the retracement becomes an interesting longing opportunity, because whatever goes up must come down for retracement. You know the deal. You go up, you come down, okay. You go down, at some point we're gonna go up. It's just how the market works. It moves in waves, it moves in cycles, okay. Nothing goes up forever, nothing comes down forever. So remember to smash up that like button. I'm not sure if Andy's still live. I think he was still live. He's doing like over a 3-hour live stream. So maybe that's why the viewers are a little bit on the low side today. But nonetheless, people can watch here after the fact. Okay. So one of the scenarios, guys, I don't have these scenarios prepared. I'm literally going to draw them out one by one. Okay. One of the scenarios that I have prepared is to say that, well, since we made this high, okay, what are we looking at? So one of the scenarios is, well, I can see an A, a B, and I can see a C here to the downside. Okay, 1, 2, 3, 4, 5. It's not pretty. Anyways, it actually looks better if I move B over there. Okay, A goes over there. You have a 3-wave, and then you have an A, B, C, a 3-wave structure inside of B. Now that to me makes more sense as a C wave. So after you get your A, B, C, that gives you a W. Okay, so one of the scenarios I'm looking at is to say that, well, what if this is only the start of something bigger? You still want to form an X and you want to form a Y. Okay, so this is one of the scenarios that I'm looking at. So say, well, what if we still form a much larger, longer, boring correction? But it's not all doom and gloom, because if you look at this scenario, okay, I do like the psychology of this scenario, because remember what I said about this high. Remember what I said about this high. Okay, imagine for a second, just imagine this scenario. Price has found its feet, and we go up, and you literally tap this high. Okay, you tap the high and people are like, oh, we made a higher high. We slightly higher high, we made a higher high. And what people are going to do is they're going to long the shit out of this retracement, only for price to continue to the downside and create a new low, where you basically formed a larger W, X, Y 3-wave correct structure, and then we absolutely explode back to the upside in a completed WXY. Okay, so definitely a scenario that I am still keeping in mind is to say that X is either in and we fall now to the downside. This is the next scenario where you formed a W, X, Y, or that 1, 2, 3, 4, 1, 2, 3, 4, 5. But you guys can see it has the same result. Instead of a 5-wave move down, you get a 3-wave move down. A, B, C. 1, 2, 3, 4, 5. But whether this is a 1, 2, 3, 4, 5, or whether this is a W, X, Y, same result. Doesn't matter how you count it. Okay, the Y could potentially still go down a little bit further if this is the end of X. But I do like this scenario from a psychology perspective. Okay, and we will go and analyze this structure in a moment. And I'll promise I'll be brief, I'll be bright, I'll be gone, because there's something very interesting I want to discuss in this live stream. Something very interesting I want to discuss. That's why I have the coffee, Bitcoin drinking coffee on my thumbnail. Something I want to discuss over here, but I'll get to that. So make sure that you stay tuned. Okay, I'm just going to share a little bit of my personal dare I say fundamental analysis, because it's not my strong suit, but I want to have a little bit of fun here on the live stream today. So one of the scenarios, guys, is that we could still, okay, so when I take a fib from the high to the low, okay, this is where it becomes interesting. If X is not finished and we still form a larger 3-wave structure to complete X, and then you have another 3-wave structure to complete Y to the downside. Okay, your 0.5 and your 0.618 are very common retracement targets for a X, so that Y still takes the low of W. If X, and this is why I say, guys, can you imagine the bullish momentum, the bullishness in the air? Okay, we take the high, we reject at the 618, and we take the low again. I mean, absolute havoc. Right? The bull market is back. You can just imagine the bull market is back. Oh shit, the bull market is not back. We just liquidated everyone that built their long positions, speculating on momentum here to the upside, longing like crazy people. Okay, the clue is going to be, if this is a 3-wave structure up, it's most likely a X. Okay, if it's going to be an impulsive structure to the upside, well, that will become interesting. But then I want price to go and tap at least the 0.7 Fibonacci. Because usually, okay, most common, when X, if you are speculating on an X and you claim the 0.7, it means that even if you still create a Y wave, the probabilities are higher that your Y will not claim the low. So you can now see how market structure plays into this as well, because when you claim a high, you want to claim it properly. You want to create a decent higher high. Once I have a decent higher high, even if it's a larger corrective structure in a Y wave, there's a high chance that you are going to form a higher low and continue. So this is going to be the clue. The clue is going to be up here if we do move up. Okay, so the bulls have a chance. Okay, it's not a great chance because, I mean, we have to respect the structure. We are still having, you know, the momentum is down, right? And this is a little bit of hopium, but what I'm trying to paint over here is you could still form a larger X wave. Create some hopium. And then depending on how high X goes, we will know, well, what is the possibility for this Y wave? Okay. Then the most bearish case scenario is obviously we have formed a 1, a 2, a 3. We are now busy with a 4th wave and we are going to create another low. 1, 2, 3, 4, 5. Okay. After which you at least expect a bounce back to the upside. So longing opportunity, shorting opportunity. Okay. If price, and this is now the conundrum, guys. If price, and I see we're getting a little bit of a drop here, but I mean, anything can still happen. We have not taken this low just as yet. If price moves up from here, and it moves up, dare I say there's a higher chance that it's a X. And you are still going to get the Y. We just don't know how high the X is going to go, which will determine how low the Y wave is going to go. If price falls down from where it is right now, there's a high chance you're going to create this low. You're not going to capitulate to the downside. You're most probably going to, go down here. And I actually have my levels marked out, guys. Let me put those levels here on the chart. Support and resistance. Let's do this. Okay. The most interesting level that is not so far to the downside, you can see I have my levels already marked out here. I might need to go to the 8-hour time frame to show you exactly what I mean. Okay, let's just clean up the kitchen over here. When I look at this range that we have formed, okay, you will see the next area of support to the downside, we have already tapped the 1.236. Beautiful reaction, and we got the bounce to the upside. Okay, so the next level is the 1.382. So if price falls here to the downside, this is the area that I am paying attention to. And this is something that I told the Legends Pro community as well. If price suddenly decides to just fall to the downside, do you have a plan to the downside? Or are you then going to wake up and say, oh crap, we're falling. I have no levels to the down. I don't know where to... or you just FOMO into the drop. Okay, you have to have a plan. I am very interested in this level. If we lose this level and we start waterfalling to the downside, well, then I still have the 1.618 in more or less confluence with a value area high, but there's a high volume node over here. Can you guys see? High volume node, beautiful support at the 1.618, where this could be your A, your B, your C, and you get continuation back to the upside. So make no mistake that I have a trading plan to the downside. You have to have a trading plan, okay? Because you don't know what the next hour is going to bring, what the next day is going to bring. But I want to have a plan, and I want to have a plan. Depending on what happens here, okay, I know what is going to happen when we fall. Right, that's my plan at the moment. Okay, so now, beautiful support inside of this zone. Okay, by the way as well. Okay, cool. So let's get back to the structure. So if the bulls can hold this zone, for some whatever reason, and we form a three-wave structure here to the upside, that could still be your X, and you go down for an ABC in a Y. And then you have a potential for a completed corrective structure. And I'm also going to be looking at these levels for support. Okay, but once X is in, I can take my trend-based FIB and I will have exact targets. So that is the one scenario. I just wanted to... I'm not sure if I should go through that scenario. Let's just load up a fresh chart over here. Okay, I'm going to get into the smaller time frames now, guys. Just be patient, okay? Just be patient with me, and then I will get into the smaller time frame. Right, I just need to open up the Coinbase chart, but for some reason my trading view is a little bit slow over here at the moment, but we are getting a little bit of an aggressive drop here to the downside. Let's see. Okay, let's just get back to this chart. It doesn't want to play ball at the moment. Not sure. I just want to see if the stream is still up and running. Okay, maybe there's a internet connection. Jeroen. Most common X tops are between 618 and 786. Yes, but if it does tap the 0.7 and 786, then Y does not have to claim. In fact, it's preferred that Y wave does not claim the W. So yes, but the most common target is for an X wave is actually the 0.618. Very well spotted over there. Roughly, yes. A stretch X can also tag yes, and that's considered a flat as well. Then we have to also open up the door to a flat scenario, because okay, now that I've got the chart loaded up here, if you have an A and a B and a C, okay, it could also, I would rather label it an ABC. Let me show you what I mean. Okay, if X taps the 0.8, I would rather label this entire structure an ABC. Okay, let's just do this. Primary, there we go. Take the fib from the high to the low. So if this wave goes all the way up to the 0.88, and specifically more the 0.9, there's a 0.9 slightly above the 0.8, like literally slightly above. If this goes all the way up here, then I would rather label this an A and a B and a 1, 2, 3, 4, 5 to the downside. Because if A wave is a 3-wave structure, then B has to tap the 0.9. So I would then give preference to an ABC instead of a WXY. But because this is a 3-wave structure at the moment, this is a 3-wave structure, it's not a 5-wave structure, okay? If price stops here and falls down again, then you have to label it a WXY. Because if A is a 3-wave structure, B has to tap the 0.9. And if it doesn't, it's a WXY. So there's a little bit of education that I just wanted to throw in here from a nugget perspective. Okay, cool. So now let's take this out the way and let's put on the doomsday scenario. So this is still the scenario for the moment that carries the highest probability. Because for us to get an X wave here to the upside, with especially now with the drop that I'm seeing at the moment, it's not looking great at the moment. This scenario is still intact. The invalidation has not been claimed. The top of the parallel channel has not been claimed. So what you want to see is a 1, a 2, a 3, a 4, and a 5. Okay? And I am actually going to change my count, guys. I'm actually going to take this one out the way. I'm going to take this one out the way. I'm going to put it there. I'm going to put 3 over here. And I'm going to put 5 over here. And let me take this out the way. I'll explain, if I have time in this live stream, I'll explain why I've changed the count. Okay. But in this scenario, what you're basically looking at is not to tap the top, to take the low, maybe, you know, get a little bit outside of the channel, find support at the zones that I've just identified, and where things are going to start looking a little bit more bullish is when you get acceptance back inside of the channel. So as long as you're outside of the channel, it's not a great idea for any long positions. You want price to get acceptance back inside the channel, especially when it breaks the top of the channel, because then you have a high chance, if price moved up here and tapped the top, then you have a high chance whatever happened here is finished and you are going to get a little bit of a relief rally. Okay, remember what I said, guys, from an education perspective. When I connect this pivot and this pivot and this pivot, as long as price does not tap the top of the channel, down we go. It's as simple as that, without throwing Elliott wave theory in it, just from a channeling perspective. As long as price does not tap the top of the channel, you can expect more downwards momentum. When price comes up and it taps the top of the channel, well, that's when things becomes interesting, because that definitely becomes an interesting longing opportunity. Whether we make a lower high and fall down again, you can take advantage of the move, or you continue momentum to the upside. Okay, so what I want to do now is I just now want to zoom into this little structure over here. Okay, and maybe before I do this little structure, remember guys to smash up that like button if you haven't done so already. This is where I like to provide education and alpha, teach you how to fish by yourself. And I want to discuss this. Okay, very interesting. So I'm going to get to that. Maybe let me go through some comments. A stretched X can tag. Okay, I've gone through that. Right, no more comments. Everyone tired of writing comments here. Dewald, the inflation data came in softer than expected. Yes, I did see, and I think that's why we got that little bounce here to the upside. I just want to see what CVD is doing at the moment. Ooh. It's absolutely crashing. So there's definitely a chance for a bounce over here, guys. There's definitely a chance for a bounce. I mean, if I look at CVD here at the moment, look at that, right? It's absolutely tanking here. Well, especially on the Bybit USD pair. Others, no, that's still fine. Nothing's happening here. Let me just refresh, make sure that my data is aligned. Yeah, that looks better. Sometimes the data glitches if you don't refresh. But we literally almost have bullish CVD almost on all three. Anyways, there's a chance for a bounce over here, okay? Right, but before I get into the smaller time frames, hi Dewald, Hogwarts, welcome, man. Smashed the like big time. Thank you so much, Dewald. Short question: how to? I just need to take this. How to look into this setup? 1 5 wave down. If you switch to lock scale, the parallel channel is different. Place comparison to regular. I see you have it on regular. Yes, when I'm analyzing a local structure, okay, I like to use regular. When I analyze on, I would say, the 12-hour time frame and the daily time frame and up, I use logarithmic. Okay, because you have to compensate for the price action from a percentage perspective. Okay, so that's just a trick of the trade. Okay, when price for, especially on altcoins, guys, you know, you get those altcoins that just goes up 50% in a week. It goes up 50 or 100% in a week. It's way better to use the logarithmic scale to do the analysis, just to bring it back into proportion. Okay, so now let's go back here into the 15-minute time frame. But before I get here, guys, I know we're getting an aggressive drop here to the downside. Okay, so let me just quickly highlight this before I jump into why I think Bitcoin has been overstimulated and what does that actually mean. Okay, if you look at the 4-year cycle theory that everyone is talking about on social media, so one of the scenarios is that this is a W, we are forming a X, and we're still going to go up for a Y. Okay, very important that I need to use this high. So guys, I'm using this measurement, okay, from a FIB perspective, because all of this could potentially be X. So what you don't want to see is, you don't want X. If you still want up, you don't want X to come and tap these two levels. You want it to stay here by the 0.618. Just want to make sure that I'm on the regular. Okay, so maybe sweep the lows, get the bounce without tapping the 0.8, because once X taps this zone, you could get a Y wave that goes sideways and it does not claim the high of W. So you could form a triangle. You could form a flat, but basically you don't take the high over here. So you range for a little bit longer and then you get the dump to the downside. Okay, so that's just one of the scenarios. I mean, from a simplicity perspective, guys, you have, okay, you have the low, you have the high, okay? These areas can still provide support for potential bounce to the upside. So I'm not going to get into day trading scalping scenarios, although I really want to discuss what happened over here, because the probabilities did in fact play out. Because remember, guys, when I was talking about multi 1-2s, okay, we were talking about, what if this is a 1-2, okay, 1-2, 1, you guys get the multi 1-2s, okay, and I said it doesn't carry high probability, and the reason I want to highlight it is because, let me just take this FIB out the way, is because the probabilities actually played out. I actually do have it here. Let me just bring it up. Where did I say? Am I on the right? I am on Binance. Ending diagonal. Here we go. Right. It's not often, guys, it's not often where I give a diagonal the highest probability. I don't know if it was during a live stream or a private live stream with the Legends Pro community where I said, guys, this diagonal for me carries higher probability than multi-1-2s to the downside. Technically, multi-1-2s always carry higher probability, but there was issues inside of the structure. If you want to count a 1-2 and a 1-2 and a 1-2, okay, and you want to absolutely capitulate to the downside, there was 2 problems, okay, that I've identified. I told everyone here on the 15-minute time frame, I cannot count a clean impulse here. Remember, guys, I hammered on this point, is to say that this is why the diagonal for me carries higher probability. You want to see a 1, 2, 3, 4, 5. There was no 5 over there. And that gave me the clue, okay, that we are most likely looking at a diagonal to the downside. Okay, guys, this dump can continue. Let's see how it plays out over here. Let me just take this white line out the way. In a diagonal 1, 2, 3, 4, 5, it did not get invalidated. The 5th wave stopped before the invalidation. Okay, and a diagonal is allowed to have 3 wave structures inside of it. What made this scenario interesting for me is that yesterday inside of the Legends Pro community, when we got this momentum here to the upside, I told them, for me, it's not time to short this structure. It's not time to short this structure, because this high was made before my minimum requirement. So yes, you can play a scalp. There's a weekly level, there's a weekly naked point of control. Yes, you can take the scalp. Make sure, and I told the legends, if you did take the scalp from the weekly and the naked point of control above, I'm not sure if I still have it here on the chart. Okay, there we go. Beautiful SFP. Absolutely stunning. Look at that. Beautiful SFP. Okay. If you did take the short, make sure when price was falling here, I said, please make sure that your position is protected and you're paying yourself to the downside, because you can go up again, because the correction could potentially not be done. Okay. Now there's a chance for the correction to be done, because it doesn't mean that it has to make a higher high, a higher high. It doesn't mean that it needs to make it's preferred, but it doesn't have to, because this could be this could be a complex 3-wave structure, okay, running flat, and then it falls here to the downside, or the correction is not done. Okay. So the reason I wanted to talk about this diagonal is that, sometimes you just need to trust what you are seeing. I saw a 3-wave structure there. Okay. Remember, guys, multi-1-2s, after price fell here is where price needed to capitulate to the downside, and it didn't. Okay. I was really in favor of price stopping here and getting a bounce back to the upside. One of the levels that I highlighted to the Legends Pro community is I took a measurement for wave 3, because wave 5 is not allowed to be longer than wave 3. So I measured it from number 2 to number 3 to number 4, and I dragged it across. So one of the levels was the 618, the 786, the 1-to-1 extension should not be tapped, because that's the invalidation. Well, you can see how beautifully the 786 offered support, and we got the bounce to the upside. Another level was, okay, I was speculating on this being the A, the B, and the C, and it's done. Okay, and for an ABC not to tap that 1-to-1 extension, the one level that I was paying attention to is the 1.382, and that's where we got the bounce. Okay, guys, I know this is very technical, but if you want to master trading, okay, and technical analysis, you're gonna have to learn this stuff. Okay, look at this. Beautiful reaction at the 1.382. I got into a long here. Okay, and played the momentum here to the upside. Beautiful trade. Because this was not an easy structure, but I'm not going to go into the detail about how I traded this scenario just as yet. Otherwise, I'm going to be here the whole day. Okay, so basically, now let's get back here onto the 1 hour time frame. Okay, guys, I know I'm supposed to discuss that coffee cup that you guys saw, but I'm here on the lower time frame and acknowledging the bounce here, the drop here to the downside. So let me just take this all out the way. So after a 5-wave structure, you can label this as a 1. This can now potentially be your 2, and now what you want to see is a 1, 2, 3, 4, 5 to the downside. Okay, this becomes 1, 2, 3, 4, 5 to the downside. So there's a chance that price falls. Okay, but it's going to fall in waves. And remember those levels to the downside that I've highlighted, where I'm going to look for a bounce. Okay, we don't know what's going to happen. Or there's a chance that it sweeps the lows and the correction continues and then it falls. It's just, this is an absolute mess. What's happening here is an absolute mess at the moment. I prefer to stay out of the market when I see this. I just stay, I don't trade, okay, because I like to wait for a scenario that makes sense to me. I longed this bad boy here like a crazy person. And then when we got this 3-wave structure up, I mean, beautiful, beautiful trade in the bag, but it made sense to me. Okay, this, what's happening here is very complex, very, you know, up, down, up, down. It's just, it doesn't make sense. It doesn't fit my trading style. So I prefer to stay out of the market. Okay. I saw the community actually spoke about it this morning, where they said, you know, they spoke about over trading. I think Simon was one of the people that also highlighted an article about over trading. People just want to trade every day. And then they wonder why they're not successful in trading. You don't have to trade every day. You trade the structure that makes sense to you. That's it. That's what matters. You have to, and that's where you have to learn patience. You're going to sit and stare at the chart for 90% of the time. And for that 10% of the time, you're going to make a trading decision. But if you're forcing a trade every single day, you're most likely still not a consistent, profitable trader. Okay, so guys, now what I want to discuss. Everyone's selling before the rate cut, the hike in Japan, the dump going according to plan, or something other event causing this dump. I'm not sure. Fundamental news maybe causing the dump. Okay, but technically we know that we can expect momentum here to the downside, where we have finished a WXY. Okay, and now you want to build impulses to the downside, and I can count a 5-wave structure at the moment. I can. So there's a chance that you have a 1, you have a 2 that's either done or it's still going to extend. Maybe you get a 3-wave 2 that extends a little bit, and then you absolutely dump to the downside. 1, 2, 3, 4. So technically, there's definitely a possibility to fall. Either from here, or we extend the range and then we fall. Okay. But then there's also, guys, there's always a bullish case scenario as well. There's always a bullish case scenario. Okay. As long as price does not claim the 0.7, so maybe it falls here, claims the lows, and it starts, there's always a chance to go and revisit $100,000. Always. Okay, where this becomes basically your WX. Okay, as long as it does not claim the 0.7 and it forms a larger ABC here to the upside. WXY in that first scenario that I've shared on the higher time frame. Always a chance. Once you claim the 0.7, then probability starts to decrease for these highs to be claimed again. Okay, you're either then looking at a longer sideways correction that does not claim the highs and then you fall, or we just fall immediately. Okay, I want to talk now. I've had a lot of questions about the 4-year cycle theory. Okay, is it invalidated? What the hell is going on? Can we still trust it? I'm not sure for the followers, for the people that's here on the live stream that has been following me since the beginning, because I have spoken about it some time ago. I can't exactly remember when, but it was some time ago. That I spoke about COVID and how I believed it impacted the 4-year cycle theory. Okay, so I want to present you with a little fun presentation to make sense of it. Okay. Right, let me make myself let me make myself a little bit smaller here in the downside. Let me make myself a little bit smaller. Okay, so you guys can get the gist of the presentation. So usually what happens, we just came from a bear market, okay? And Mr. Jerome Powell starts stimulating the market, and he gives the market some coffee, okay? Oops. He gives the market some coffee. And the market drinks the coffee, okay? And that stimulates the market. This is the interest rate, cuts. He cuts the interest rates. And I'm now discussing with you what typically happens and why we got the 4-year cycle theory in the past. Okay, so what typically used to happen is he gives the market some coffee, and then what happens is the market goes crazy into a nice little bull run. Okay, healthy bull run. And then after the bull run, you go into the bear cycle. You fall asleep, okay? Because after you've had your coffee, you go into that little bit of a crash. You feel lazy. You need another coffee. You're not having the coffee, so you feel like you want to sleep. And then the market returns into a neutral state. And that is typically your market cycle. It gets stimulated. You go into a bull cycle. It goes into the bear cycle. It returns to a neutral state. And that is typically what's driven the 4-year cycle theory. What then happened is when COVID came, guys, it wasn't just the coffee, okay? This is what happened, okay? It was an overstimulation that we have not seen most probably ever. So you had a couple of coffees over here, right, when COVID kicked. And what happened is it created that massive bull run that we saw during 2021, 2020, okay? Absolute explosion. But now you know, okay, when you've had so many coffees, what's going to happen? You are going to sleep your ass off. You are going to sleep like a crazy person, okay? Before you will return to normality. And for those of you, and I'm using the coffee analogy over here because I know most of us drink coffee, caffeine. If you have 1 cup of coffee every day, okay, you know more or less when you're going to start crashing and you need another cup, or you just leave it. Because personally, me, I only have 1 cup of coffee a day. But I can tell you now, when I have 2 or 3 cups of coffee a day, I literally run on my ears and then I crash hard, okay? And it takes me a long time to recover from that than normal. So basically what happened is that's your cycle where things happen normally. And now we have, because of COVID, the market was overstimulated, which basically means that, this is my theory, guys, my personal view, is that the sleeping phase and the rally that we have seen so far is being extended because the market is still recovering from it. Jerome Powell has already given the market a little bit of coffee. We haven't seen the euphoria yet. So this theory basically says because of the overstimulation, the market needs a little bit more longer to recover before the actual cycle begins. And that is my fun little presentation. Right, I hope you guys have enjoyed this little presentation over here. Let's get back here onto the price of Bitcoin. So let me make myself nice and big here again. I'm not sure if any of you have watched, what is that guy called? What is it? Ralph Paul. Is it Ralph Paul? I think that's his name. I watched one of his live streams the other day, or one of his videos the other day where, he also spoke about the 4-year cycle theory according to his view and data. Guys, I can't get into it because I don't even understand all of it, and I actually don't even care about all of it from a day trading perspective. But from his perspective, the market has now matured into a 5.2-year cycle theory. Okay, I'm not sure if any of you watched that video, because I did see it trending on social media. And when you extend the cycles to 5.2 years, which means that the bull cycle is still coming in 2026 according to this data. And this has been nothing so far, okay? This has just been the neutral state, okay? The disbelief rally. The fun and games are still coming, and according to these prediction models, it's coming in 2026. But we're still going to have a dump before that happens. Okay. So I just wanted to share that. But when I saw his predictions, and he used other data points to basically derive and come to the conclusion that the market has been extended, it just reminded me of the COVID analogy that I've been speaking about in the past, where you can't overstimulate the market to such an extent that you've never done before and just expect everything to run the way that it's run in the past. Like, guys, the amount of money that was printed during COVID was unheard of, and it will take a longer time for the market to recover from the coffee. Okay, so there's a chance, and the reason I also wanted to highlight it is to say that there is also a bullish scenario that supports an euphoric run during 2026. And I have actually made a live stream about all of those scenarios. And in all of those scenarios, okay, let me just summarize it over here. There's a higher chance, let me put it this way. There's a higher chance, with or without a dump, it's preferred that we still get another low, because that will open up the door to a more bullish case scenario. Okay, that price finds support inside of this zone. So one more low will actually open up the door to a more bullish case scenario, and then you go. So I just want to discuss the most euphoric bullish case scenario. So from a technical perspective, is there a scenario that supports? Because I see people are throwing super cycle at the moment. The only way that you can get a super cycle is in a third wave. It's the only way that you can get a super cycle. Third waves carries the highest amount of volume. They are the most euphoric, and they blow your socks off. You don't get them in wave 1s, you don't get them in wave 5s, you get them in third waves. So when I look at the structure, let's go here onto, okay, let me use the Coinbase chart. Let me switch this off. Let's go here onto the weekly time frame. Okay, now we have to consider the following. Okay, if this is a 1, a 2, okay, a 3, a 4, and a 5. Okay, so that was the end. And this is an A, a B, and a C. Well, ladies and gentlemen, okay, so the scenario that supports that theory that maybe we have now a 5.2 year cycle theory, and we're going to actually have the altcoin season and the extreme bullish run in 2026 is you get a 1, you get a 2, and then you go up for a 3 and a 4 and a 5. And this does support, okay, the theory that you can go into a third wave. 1, boring. We all know this was the most boring bull cycle that I have ever seen. Okay, and every time when I speak about the euphoria, guys, I have not seen any euphoria in here to the level and to the extent that I saw in here. Okay, then I get comments from people saying there was euphoria, there was no. Okay, then you were not here during this bull market. You were not here, because if you were here during this bull market, you will remember the extreme stupidity euphoria. I'm talking about stupidity euphoria where you cannot lose. Bitcoin is going to $100,000. Can you remember plan B? It's going to $100,000. People selling pixelated pictures of rocks and shit, you know, at stupid $100 million prices. There was stupidity in the air. I haven't seen stupidity over here. I haven't seen to that extent. I haven't seen it. And it's very strange to end something without that euphoria. But If we go into a third wave, that will definitely give us that euphoria. Definitely give us that euphoria. Where you label this a 1, a 2, a 3. Then you go into a bear market, okay? Fourth wave can take very long. It can even take much longer than this over here. It can go double the amount. So you go into a long, boring bear market. And then you have another boring bull cycle to complete your fifth wave. Okay, so I just wanted to, guys, I'm not saying I'm not a financial advisor. Please take everything that I do with a scoop of craziness, okay? It's just when I think about the COVID analogy that I've always used, and I hear what other data analysts are saying that are well respected within their fields, which basically are leaning towards the possibility that we are going to get a better bull run. I don't want to use the words super cycle, guys, okay? But we are going to get the explosion that everyone is waiting for. We're going to get a proper altcoin season. If that is going to happen in 2026, there is a scenario that I've just shown you that does support it. Okay. Worst case scenario. Now let's talk about worst case scenario, okay? This was the end. The fifth wave didn't end here. Well, it's the same thing, but then I think it's going to be even more delayed. Because if this is the top, and this is only the start of the correction for this impulse. Whew, okay, let me do a time flip. Let's just put it in real technical perspective. If that's your low, and that's your high, you at least want the correction to finish after the end of November, or November 2026, which means that the entire 2026 is going to give us a bear market. And dare I say that the correction can even continue for longer. It can go to the 618, it can go to the 1-to-1 extension. But like I've highlighted when I did the macro analysis in one of my previous live streams, the probabilities are higher, okay, that we are not going to do this just as yet. The probabilities are higher that either this is the high and all of this has been part of the correction already, okay, or yeah, and we basically find support inside of this zone and we take the high again. Because all the scenarios that I went through during my previous macro analysis points to the fact that this high needs to be claimed soon again because it ended in a three-wave structure. And because it ended, guys, that for me is the clue. That is such an important clue for me. Because if I go here onto the, let's go into the 15-minute time frame. Guys, I look at these clues. Because of this, can you guys see? You know, this is what I look at. Because of this, that three-wave structure, inside of all of this mess, I knew that the probabilities were higher that we're not going to capitulate from this point to the downside. Because of that. You cannot create multi-1-2s with a three-wave structure. Yes, you can force a five-wave structure. I think myself and Joan also had a discussion about it, where you can force a five-wave structure in there, where the fourth wave is many times longer than the second wave. Or you have an expanding structure, okay? Look at this, guys. I mean, this is the time that I've spent inside of that structure because it gives you clues. It gives you clues what the next move could potentially be. Because when I zoom into the structure, I was even like, okay, well, I can see a 1, a 2, a 3, a 4, and a 5. Okay, but there's overlap. Okay. So I have to consider a diagonal. Wait, let me take a flip from number 2 to, okay, you tap the 0.618, which is not preferred. So now I have to consider this. Expanding. Okay, well, that works. It does work, technically. 1, 2, 3, 4, 5. Fifth wave is the longer. It's expanding structure, but it's rare, and it never carries the highest probability. And because it doesn't carry the highest probability, Elliott wave rule says you have to consider a three-wave structure. Okay, so now I considered a three-wave structure, and then because I considered a three-wave structure, when I go into back to the 15-minute time frame and we spoke about the multi-1-2s, and you guys can go back to that live stream where I said, dare I say that an ending diagonal carries higher probability because of that. It counts way better as a 1, a 2, a 3, a 4, and a 5, and I'm looking for a bounce. And this, because of this, and this wave not being a 5-wave structure, I'm not going to go into that as well. Okay, I knew that there was a high chance for a bounce. A high chance for a bounce. And this is why I was very interested in longs over here. Clear invalidation. Okay, the invalidation was crystal clear. I knew exactly where I needed to put my stop loss. Okay, your fifth wave is not allowed to be longer than your third wave. So there we go. Okay, that's your invalidation. Very far away, but I mean, you can still SFP, stop, protect, you know, give your stop, however you want to trade that. But I knew that the bounce was very highly likely. Okay, and now because of that, dare I say, the market has left us a little clue. So if I go onto the daily time frame, the market has left us a beautiful clue. Well, for me at least. Okay, we have a three-wave structure. You cannot end something on a three-wave structure, which means it doesn't matter how deep it goes, it needs to take that high again before you can consider longer bear markets. When you start considering longer bear markets, then ideally you would have wanted to see that. I did not get that. Okay, right, legends. So that's basically what I wanted to discuss today. 2022, baby. Haha, such a spot on analogy. I love it. Super fun. It's Raoul Pauls. Yes, intriguing as well. Yes, Raoul Paul. Yes, I never know how to pronounce his name properly. Raoul Paul. Yes, you guys have said it. Okay, nice presentation, sir. Thank you so much. It took me hours to put that together. Right, long story short, hyperbull run final stretch still in progress. Yes, that's basically what it looks for, but it doesn't mean that we're just going to go up from here, guys. It could still get a little bit worse before we go up. Okay, and maybe tomorrow or in the next live stream I'll go through some of those macro scenarios again. We can carefully look at those macro scenarios again and see which one carries the highest probability. Well, I can actually share the one that let me just share the one for now that I think could potentially play out beautifully. Okay, you have formed a 1, 2, 3, 4, 5. Okay, this, ladies and gentlemen, is part of an A, a B. Now that three-wave structure makes 100% sense because it's a B. Okay, and now we go down for C. The only thing missing inside of this structure is that we have to make one more low. Okay, so you want to see a 1, a 2, a 3, and okay, we have a high amount of volume, and you want to see one more low on a less amount. You want volume to go down. So you need to create one more low on lesser volume. But let me just highlight this. You could get volume that spikes like this. You could get that. Because I know that C waves loves to end on a high amount of volume. I have seen it many times. In a normal impulse, okay, look at this, guys. In a normal impulse, look at this. Volume is tapering down, okay? But in a C wave, you can end something on high volume. So I don't think volume is going to be a factor. But in this scenario, okay, this is, for the moment, is the highest probable scenario. Okay, and if we do this, okay, if we do that, then I will share with you what scenario I'm looking at then. That can still give us that bullishness in 2026. But if price falls from here, bang, finds maybe support here above these highs, Beautiful. 1, 2, 3, 4, 5. A, B, C. Okay, you could get that. 1, 2, and you can go up for a third wave. And that potentially, ladies and gentlemen, is what we have been waiting for. This boringness, this boring bull market that we've experienced up until now is only built us this first structure that we need for the euphoric bull run. Okay, that for now is the highest probable scenario, that we have a 1, 2, 3, 4, 5, A, B, C. Okay, you need one more low, you need the drop, and we continue to the upside. And this is why I am so interested in the levels downstairs, guys. This is why when I look at these scenarios and I go here onto, let's go into the 8-hour time frame. Let me just take these levels out the way. This is why these levels are so important. You have to have them ready. I cannot explain, I cannot emphasize it enough. You have to have your levels ready. Okay, because based on that scenario, okay, I think I heard Andy also say that, you know, if price dips below 80k, he's buying like a crazy person. Well, I'm in the same boat. If price comes into this zone, guys, anywhere in this zone, okay, I'm loading up. I'm not swing positions, not leverage positions, spot positions. I'm loading up like a crazy person in this zone. Because I know that there's a high chance when price hits this zone, there's a high chance that it can come and claim the high. It's going to take a lot of patience. Okay, but trading has taught me a lot of patience. Remember to smash up that like button, guys, for the education alpha scenarios. Okay, and remember also, if you'd like to support the channel, I've got, guys, I wanted to show you on Valto. This move, I'm not sure if any of you can remember. Let me just make myself a little bit smaller here. Okay. I am being a little bit a cowboy with this account because it's a small amount. I have to acknowledge I am being a little bit of a cowboy. But with this move over here, okay, this move, okay, that little move, because I was so confident in the technical analysis, I knew everything that I've just explained. Okay, I started off with $100. I've almost doubled the account. But it's not how I trade my larger portfolios, guys. Disclaimer, okay? I'm being a cowboy. It's a small amount. I'm more than willing to lose this account and bring it to zero. But I'm having fun with this account. And when I do see high probable setups, I don't trade this account every day. When I see a high probable setup that just where for me the planets align, okay, I'm going to, okay, next target is, the next trade that I want to take is another $50 on top of that. The next trade is another $100 on top. I want to see if I can build this up to $1,000, $2,000 just to have some fun here on Valto. Trading fees are absolutely insane. So, I mean, most profits are coming towards me. So yes, guys, link is down in the description. 0.2% take a fee. Okay, one of the cheapest trading exchanges at the moment. You have to connect your wallet. It's not a centralized exchange. Trading course, if you want to learn how to trade properly like I do, and then, guys, best deposits and sign-up bonuses from these exchanges, your way to support the channel. If you want to join our pro community that I always talk about, okay, there's the link down in the description. And that is basically it from my side. Hi, Dewald, can you show this also on ETH, the macro analysis? Yes, I can do that. I do have analysis. Okay, let me see. Yes, I do have a couple of macros analysis over here that I can share, but I will do it in tomorrow's live stream. Hello, charters. Rudy, guys, myself and Rudy actually had a conversation about it. Rudy shared his views with me, and because of our conversation, Rudy, I decided, let me theme this live stream based on what me and you spoke about as well. So Rudy knows that maybe, just maybe, it's not guaranteed, but just maybe, okay, we are going to see something in 2026 that we've been waiting for the whole 2025. Okay, but I just had to give it a little bit of flair with my analysis from a COVID perspective as well. Okay, legends, have yourselves an amazing day. I will see you tomorrow, and then we can tackle those other scenarios. Until then, cheers for now.